Hello everyone. I'm going to try to make these videos shorter than usual so that you can um, grab information a bit quicker. As you may know, I like to trade gold, and from now on I'm going to kind of keep track of my trading journal. I'm going to share with you some of my personal trades, and I'm going to simply explain how and why I'm doing what I'm doing with the terms that I have found that are best to understand and that best teach. Okay, disclaimer, of course, as always, I am not a financial advisor, and this video and or any written content I create is for my personal use and educational purposes only. You must be aware that trading the financial markets is risky and you can lose money, and you must always trade at your own risk. So that being said, let's switch our screens over here, and I'm going to show you my today's trading plan. Okay, it's Friday. It is 4 p.m. when I'm recording this video, and this idea that I posted privately in my trading view, I did at 7:40 something in the morning. I think almost 8 in the morning. And as you can see, I have just mapped out what I call 4-hour imbalance. You may have learned this as order blocks or um, support and resistance, liquidity, supply and demand, and basically, I mean, they are terms that indicate the same thing, and that is generally speaking just areas or price ranges where the market has not tested yet and where there are orders. Okay, whether those are sell orders or buy orders. Okay, I also use the sessions highs and lows, in this case London sessions high, and my trading plan of the day is as illustrated. I projected the market to retest London's highs and grab liquidity to come back down, and it will come back. It should, or I guess that's my idea, right? That it could go back down to the weekly low. This is if you have been following gold, you may know that throughout the week it made a very big push to the downside after the Fed and Mr. Powell, however you like to pronounce, came out to speak about the U.S. economy and etc. I don't like to get into many fundamentals. They are important, of course, but I am a mostly 90% chart analyst, price action trader. So I'm going to explain in a clean chart how I came to the conclusion that this could happen. Okay, this is gold 4-hour time frame. I don't want to go back to the daily because it's just not necessary. The 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 concepts are the same. You map out your charts from bigger time frames to lower time frames to understand where the market could bounce, could consolidate, could show rejection. Okay. And I'm going to use a very simple concept that has worked for me for many, many years, and I still use it. And that is the 50% retracement. So I'm going to pull out my Fibonacci retracement tool, and I'm going to show you something very interesting. If you notice that I drew it from here to here, meaning I want to see this impulse rejection. And if you see, the first time it rejected was on the 61% area. Eventually it broke it, and that became a support. If I pull it, if I invert it, so now let's look at the upside move. So from down here up over here, it it retraced into the 70% and it showed rejection. Okay, it's showing rejection, and now if we keep doing this exercise of inverting the retracement tool, we have to see where it's showing rejection, and that is just below the 50%, meaning this push that I was just talking about from this week. The pullback has been showing rejection just before that 50% retracement, and that happens to be this area of where price in the past showed rejection. Over here, it showed rejection to the downside, rejection to the downside, rejection to the downside, and then price retraced toward it. That's the key. That's where the money is, honestly. Just understand where the market needs to go and what will happen once it gets there. So if we were looking at this chart before these candles were made, before these bullish candles were formed, and we are seeing this rejection here, well, based on this historical behavior, we can have at least more probability of success to think. Notice how I have never spoken in um, like positive, or I guess guaranteed terms. You don't say the market will, the market has to, because you never know. Okay, it's all would, should, could. So anyway, but then again, you're trying to reduce the risk of losing, right? So the higher the probability of something happening, the better. So once here, and seeing this rejection in lower time frames, let's go to that back to the 15-minute. So seeing these candles over here reject with such strength, when the market would come down here and push back up, come down here, push back up, come down here, push back up, we're seeing this behavior, and we say, okay, well, let's just wait and see what happens. Obviously, this big engulfing bullish candle definitely shows me that, okay, this is now an area where the market is going to change direction, because it needs to recover, it needs to grab liquidity. If we go back over here, it needs to grab liquidity to continue pushing down. Now, where will it grab liquidity? If we go back 4-hour time frame, we see that simple but very powerful and effective way of mapping out the market with your highs and lows. This low that the market created, now you obviously have to map it out. And if we extend this, we're gonna see that this is where the market behaved in certain way in the past. Well, let's see and hope that it reaches that area, and eventually that's what it did. We go back down to 15 minutes. The market started to make its way back slowly up to this area, and over here what happened in London was that London went even further into it and then retraced back down. I have this interesting indicator that I want you guys to start to think about using, and it maps out the market sessions and the hours. So this is when London opened. London made this high and then this low, and this is where I made the analysis. If you see 15-minute, these candles were already there, but the reason why I liked the idea for price to go back up and not break down is because I have seen that the market has been respecting this support. Okay, so go back to the idea. We have seen a test to break 1, a test to break 2, a test to break 3, and I just see rejection. So I said, okay, well, let's hope that it wants to go back up for a better entry. I think you guys have also heard the term premium entry or smart money entry or whatever. They're all the same concepts. It's basically the market looking for a better price to enter. It's simple. Um, and so that's why I said, okay, let's grab some. The market has to go up here, retest London's high, and grab liquidity. Now, key words are London high. Usually, and I hope you write this down, usually, whatever session you're in tends to retest previous sessions. In other words, London session will will retest Asia session. New York session will retest London session, and so on. And when I say retest, I mean the highs and lows, or the areas where that session created interesting moves, or changing directions or whatever. Okay. I don't want to complicate things too much, so that's why I show this to you so that you can see it better. London, the line is now up here, but before it was down here, and it went up again because this was still London session, but this is now the high, London and New York session. This is now the range is the high. So usually what happens during the New York session, it depends on where the market is. If you see the market when London it opened, New York I mean opened here where it was at the bottom. So what you have to do now is study what happens during the opening. New York opens. It's retesting the support, but it's not breaking it. If it doesn't break it, it's most likely probably going to retest the high. Okay? And that's what it did. Had this candle over here closed maybe like this, where it closes under this support and into this empty area, then it would be safe, or I guess more appropriate to think and to project the market to have come down and made that push down earlier. But since it was showing rejection in the support, and since in the end it did indeed it respected it, meaning the candles closed above, then I said, okay, let's just wait for market to push back up to get a better entry. Could I have gone long here? Yes, of course. If you're a very short-term trader scalping the markets in the 5-minute, 1-minute chart, you could have gone interesting trades from here to here, then shorts from here to here. But that's hyper trading, I think, and you can fall into the into the into the gambling perspective of trading, and that's just like, you're just like going up and down, like you just want to wait for better entries. Anyway, so that being said, that is the reason why New York pushed up, because it didn't break London's low. It went to retest London's high, and it did break it. It did grab liquidity up here, and it did show rejection. So this is money, guys. This is where your money is. You don't have to have a magical trade that gives you $1,000. I've been there. I've lost money thinking that. I have lost money that I had in profit and I didn't close, and it retraced back because I wanted the perfect trade. And guess what? There isn't. There is just discipline and patience. Okay, so once again, sessions retest sessions. Understanding this is understanding how the markets move, and that translates to money. So let's keep going, just to finish and make this video not too long so that you can grab a lot of information a bit quicker. We show rejection. How do we know that it's not going to break? With the same principles that we used here to say that it won't break down. We just keep seeing rejection, rejection, rejection. The bodies close under this price of 1928, I'm sorry. 1928.23 to be exact, but point is, the market hasn't closed above that. So it's safe now to think it just will want to retest the low. And now you have a new range that you have to wait for market to break, which is this. This is your new range. Now it's Friday, 4:40. The market is going to close in about 28 minutes, so there's no point in doing anything now, but this is what you're going to study next week. What will happen within this range? If it breaks down here, where will it want to go? To this minimum, to this previous low. If it breaks, if it goes back up here and retests the resistance of this new range and it breaks it, where will it want to go? Let's go back in the past and see areas of interest. Maybe this maximum over here, this little area where it showed rejection and consolidation, and if you see, it does make sense, because this is an area where price stopped to consolidate. So areas where there's a lot of candles together going up and down, up and down, up and down, are areas in which price tends to stay and tends to look for in the future. Okay, so if it breaks this, it's safe to say that maybe around here of 1930 to 1932 is a safe area to go long. Okay. Now, what is the importance of having a general idea and a long-term bias? Well, that you just follow your idea, you follow your plan, you stick to your bias. My bias is short. I don't want to long gold. I don't want to go long, because I know that long is only retracement for a more favorable and more logical and more obvious trend and direction, which is short. Now, why? I'll explain this one last time. If we go back even further out to daily, what is happening? Price has shown rejection in a very hard and a very strong, I would say a better terms is stronger rejection. So price already showed big rejection. It wants to go down to retest more important supports. Okay, if we even go weekly, what is happening? Where is price showing rejection? In a very strong resistance, historical resistance of 2000 something for the price of gold. So it's now it's working its way down. That's the longer term trend. So you understand now a bit better. Okay. So anyway, guys, I'm gonna leave it there. I hope I made myself as clear as always. And if you happen to have any questions, just comment them below. And I hope that you have a great weekend. I'll see you next time. I'll trade. I'll make these videos. Try to make them short. And yeah, I hope you enjoy, guys. Share, like, comment, whatever.